Well, hello everybody. We're going to make a start now. So I hope you're ready and sitting comfortably. So a very warm welcome to you all then. Thank you very much for joining us today. We just held off a few moments then at the start because there was a flurry of people joining, but it's evened out now. So we thought we would make a start. So as ever, I'm just going to make a very brief introduction, if I may, just so you know who you are listening to, if you've not joined us before. So my name is Karen and I am the HR Knowledge Manager for HR Solutions, and I'm the lead presenter today. And I am joined by my lovely colleague Sue. She is our HR Operations Manager. Now you won't hear her voice today. She is in the background. She's here monitoring and collating any questions that you might have. So please do feel free as we go to use the control panel to send us anything you want to query. Equally, if you were to have any technical problems, hopefully there won't be any, of course, but if there are, then again, please send her a message because I won't be looking at those as we go, and she will do her best to help you wherever she possibly can. So we do record these webinars, so they will be available for you to watch again on our website if you should want to do that. And we do make these slides available to anyone that should want them as well. If you drop us a message, we can send them over. All right then, so as you're aware, we're not doing a primarily core HR topic today. We are looking at the Criminal Finances Act and the Finance Number 2 Act, both from 2017, but we're going to be looking at actually what they require from a HR perspective. Okay, so they have been around for a few months now, and we're starting to see where HR can play a part in protecting an organisation. So the structure is going to be having a look at employer liability, okay, that comes about from these, particularly with regard to the facilitation of tax evasion. And then, as I do like to always provide some practical help rather than just doing the scaremongering part, I am going to look at some steps that you can take to try and protect yourselves from that liability. We're then going to move on and we're going to have a look at the Finance Number 2 Act, and this is where we get the Post-Employment Notice Pay, or PENP. So I have done some communications about that in the past. You might not have heard it, but we're going to have a look at that in a bit more focus today. So again, in terms of practicalities, we'll have a little look at the actual impacts of it, particularly on things like PILON clauses, pay in lieu of notice, and settlement terms and negotiations, because those tend to be the main touch points that HR ever have when it comes to notice pay on a practical basis anyway. So here we go. Let's have a look at employer liability and where we stand in respect of that with tax evasion. So the Criminal Finances Act then, as I say, it's been with us for a short while, and as I'm sure you're aware, you know, it has actually been the case for a long, long time that tax evasion is of course illegal, and it is already an offence to aid tax evasion. But what this piece of legislation does is it takes a much firmer stance for forcing organisations to change their culture in respect of it. Okay, so what we're looking at now really is if an organisation, and that includes companies, partnerships or relevant bodies and things like that, if an organisation should become aware of tax evasion, okay, and they fail to prevent it, then they are now criminally liable for having facilitated the evasion. Okay, so that's a really crucial change. And to clarify what I mean by that, okay, if an employee or in fact any associated person who's acting on behalf of your organisation should become aware of tax evasion by anybody else, okay, it could be another colleague, it could be a client, whoever. If that employee becomes aware of tax evasion, they will need to take steps to address it, okay? And that includes you, if part of those steps are to escalate it to you. Otherwise, as an employer, your organisation as a whole will be guilty of failing to prevent tax evasion, okay? Now, equally, if someone in your business should become aware that an employee, so another employee, is committing tax evasion, but again fails to take steps to prevent it, then your organisation as a whole may be guilty of the offence of facilitation, okay? So there's two aspects to this. Firstly, the fact that an organisation as a whole can be found guilty of failing to prevent evasion, but also if we become aware of it, we could be guilty of facilitating it if we didn't do anything about it, okay? So we've got to put preventative measures in place, and then we have got to make sure that we are escalating it if we become aware of it, okay? Otherwise, just on the actions of a single individual, a single employee, your organisation as a whole can be criminally liable. Okay, so looking at technically when this occurs, then there are three aspects to this, okay, for you to be, unfortunately, in that position, all right? But firstly, there has got to have actually been some tax evasion that's deemed to be criminal, okay, by a taxpayer. So that's got to have happened first. Next up, one of your employees, or again, any representative of your organisation, has got to have then criminally facilitated that evasion, okay? And what is deemed to have been criminal facilitation is something that we still refer to the Act of the Accessories and Abettors in 1861. Okay, that's what we're referring back to, all right? So I'm going to hold my hands up. I haven't read that. I haven't got a clue what it says, okay? And if anyone else here has, then very good for you. But, you know, essentially, we've got to then firstly have had someone actually evade tax. Secondly, we've got to have an employee facilitate it, okay? And then we get to the point where we start having responsibility as an employer, okay? So then if you fail to take appropriate steps to prevent that employee from having committed the facilitation, that's when we become liable for having failed to prevent it. Okay. So that's the scaremongering bit. Well, not quite over, because I'm going to now look at what happens if you should fall foul, okay, and be caught. So potentially you are at risk of an uncapped fine, okay? There are no restrictions with regards to this act. Potentially it is uncapped. And where it's relevant to you, depending on the nature of your business, a care organisation is quite a good example of this, but where relevant, you might also be prevented from being awarded any kind of public contracts to operate, okay? And of course, as with many things, there is also going to be the knock-on reputational damage that you might face in the public eye, okay? Now, this is something that can quite often feel like, that's never going to happen to me. You know, is this something that we really need to worry about? It's going to happen once in a blue moon. And yeah, you know, that might be true. But I've managed to think of a couple of scenarios, at least, where you might agree that you could actually see that happening. So I want to talk through those with you. And then I'm going to look at the practical steps, because there are some fairly straightforward things that you can do actually relatively quickly as well that would mean that you perhaps didn't have to worry about this being an issue. Okay, but indulge me on this one. So scenario one, all right, you've got a client, okay, and they are a restaurant owner. Now they telephoning your employee, and during the course of that conversation, they tell your member of staff that they pay staff tips cash in hand. Okay. And they do this so that they don't have to put it through the books. All right. Now, you would expect your employee in this sort of situation to escalate this comment to you, okay, so that you can then report it where appropriate. If this employee were to have shut their ears to this and just kept it to themselves, then it starts to become possible that they're deemed as having facilitated evasion, okay, under this act. All right, so very quickly, an employee can get themselves and the company in quite a precarious situation. Now, if you can't demonstrate reasonable steps have been taken, A, to raise your employees' awareness to this issue, and B, what they should do about it in this scenario, then this is where you potentially start to become criminally liable as an employer. Okay. One more scenario then. Let's say an employee is chatting on their lunch break to another colleague about a windfall in wealth. They should be kept quiet. You know, lucky them, great, okay. And they even then make jokes about it over your internal instant messaging system. This is another example, okay? This could be a signpost to that member of staff that personal tax evasion is going on. And again, it's something that they would have to be reporting to you, okay? They found it out during the course of their employment. They would need to be reporting it to you. And you would then have to look at what steps needed to be taken to deal with that so that you don't fall foul, okay? Hopefully, they would be using their discretion to escalate it appropriately. Okay, but again, if they weren't aware of this obligation, if they didn't know where to go and check what they had to do, you know, even if they had a suspicion, I'm not sure if I should be saying something about this. Let's say they check their handbook or a policy and there's nothing there, you know, this is when you would start to be liable for having facilitated it or failed to prevent it, rather. So, what can you do about it then? Well, let's have a look, okay? Fortunately, we are told that if employers put adequate prevention procedures in place, then they are going to gain their excuse, okay? So we're not told, of course, we're not told what that actually looks like. And I imagine, you know, it's quite reasonably because it's going to be different for every organisation. You know, what's appropriate for one is not appropriate for somebody else. But you're going to have to do what's, you know, within your reasonable capabilities to try and do what you can. And for goodness sake, evidence it as well, you know. So we've considered the sorts of things that you might be able to do from a HR perspective, at least, okay? And I've come up with a list of 7 things that are probably all reasonable, fairly straightforward things that you could put in place pretty quickly, okay? And then you never have to worry about this again, unless someone reports it to you, of course. Now, I do just want to stress, these are techniques that you can implement from a HR perspective, okay? We cannot take any responsibility, you know, or liability for giving you advice from a financial perspective, you know, or any other legal compliance perspective for that matter. You know, we are not regulated by the Financial Conduct Authority. So this is purely what HR professionals can do from that angle. All right. So first things first, do a risk assessment, okay? It's a fairly straightforward thing to do. It's always a good place to start because without understanding the risks you're exposed to, you know, it's very difficult to know what's appropriate to put in place. And you might end up just putting the wrong things in place as well. So the first step for you is going to be to review, the extent to which your organisation may be exposed to people or businesses who could be evading tax in the first place. Okay. You should then look to consider the number of staff who deal with these groups and the manner in which they could be exposed to any malpractice. Okay, now I'd suggest that senior management are involved where appropriate from the outset on this. Okay, they're going to need to consider any existing processes that you have internally, and they're going to need to try and preempt circumstances on a real term basis. What might actually crop up that my employees are going to have to handle, a bit like those scenarios that I just gave. Any opportunities where they might be facilitating tax evasion, even in situations where they might not realize it or particularly want to have facilitated it. Where could this come up? And a bit more sinister, but where are there any situations where they might actually feel motivated to help facilitate tax evasion, as well? Many of us often have things in place to do with bribery already, for example. And if anyone's in a difficult circumstance, you never know what might motivate somebody to do something like this. So look at conducting a risk assessment, okay? Work out where your weak areas are and preempt circumstances. And then, of course, we're going to have a sit down and review of the findings. And these findings might push you to consider appropriate measures that can be put into place. Now, I'm very much still in a GDPR mindset. We have got webinars available on this as well, if you're interested. But I'm still thinking about measures very much in an organisational and a technological sense. And if anything, I think that's probably just, really good advice to carry through to other walks of life that we might have to deal with. So think about the sorts of things there that you can implement, and a really key example of a measure is going to be awareness training for your staff. Okay, we can be aware of it at a top level. We can, implement policies, and write them and put them somewhere. But unless others around us actually are aware of it as well, understand the personal responsibilities on them, understand what to do about it, there's no point putting these things in place, So staff awareness training is going to be really, really key. And again, documenting the fact that people have attended, maybe even that you do refresher training every now and again, is just going to be such a robust measure that you could put in place to demonstrate that you're trying to comply with the obligations here. Now, these measures hopefully are going to be sufficient that they can protect you against any weak areas. You're going to need to review them to make sure that they can accommodate for any developments that might happen. So if you did have any changes in the way in which you go about procedures internally, then you might need to review these measures. Equally, there might be other tools or methods that could improve prevention that come about as time goes on. As part of a review, you might want to identify anything new or any emerging areas of weakness that you need to adapt for. And again, if you are reviewing regularly, then you might also be able to spot any trends that develop that you can identify and again implement further measures accordingly. Or it might even be that there are things that are just not working, that you can scrap and come up with something a little bit better. So the third thing that you might want to do for some organisations, it might be appropriate to look at adopting a short but perhaps formal policy specifically on the prevention of facilitating tax evasion. Alternatively, you might already have a policy in place, say, on whistleblowing, and you could quite easily update that to include this matter. So that's something that you could do straight away. You might even be subject to a regulatory body like the Care Quality Commission, for example, if you're a care agency. Find out whether or not they have got a stance that you can adopt into your policies. And then with your procedures, okay, you've got this policy in place. What do you want staff to actually do to action it? Okay. Now, it might not necessarily be that your reporting lines are the same as your line management. You know, it might not be that you say everything needs to be reported to the person who handles your holiday requests. You know, it might be that actually you have a central point for this, or it might be that you want any escalation to go to somebody more senior, you know, but make sure that you've got really clear reporting structures for compliance matters such as this, so that anybody that you ask off the cuff would know who they would have to go to in this kind of situation. Okay. And in the same family as procedures, you might want to consider issuing some sort of statement. Okay, now this might be a public statement. We're quite often used to seeing these for things like corporate social responsibility, you know, so you might want to draft something fairly concise, you know, a paragraph or something that you issue, say, on your company website or on any other sort of marketing material and things like that with regards to it. And then in the same vein, you might have one that's similar or even the same that you issue internally. So it could be the same, but you might want it to be a little bit different if you wanted to, say, have a slightly softer approach for your public statements and a bit of a more hard-lined, practical approach for any internal communications that you have. Okay. Now, issuing statements like this, you know, can be really helpful. Not only is it going to manage expectations of your clients and customers as well, but it's also going to help demonstrate that you are taking this matter seriously. Now, if all that does, you know, is discourage your clients from telling you about tax evasion, you know, then fine. At the very least, it means that you then don't have to deal with it, but you're also promoting, you know, the enforcement of this law. Okay, and it also means that it can't come as too much of a surprise when you start to enforce your responsibilities with regards to it. And similarly for staff as well, you know, if you did ever have to take somebody to task over the way they've handled a matter, you would want it to have been very clear what your expectations are from the start, okay? Which does move me on to the next point with regards to communicating your expectations to staff. But just a further note on issuing a statement, okay? You might choose to do all of these things, you might choose to do just a few, but I would strongly suggest that if you decided just to issue a statement, then that's unlikely to be sufficient on its own to demonstrate reasonable prevention procedures. Okay. So, for example, if you didn't have any reporting lines in place, if you didn't have a policy, if you didn't have evidence of any communication of these things to staff, and it was just something you published, you know, and left to get dusty, you know, that on its own is not going to cut it, is it? So I think this is a quick win, but it's certainly going to have to be something that is accompanied with other measures, other tools. So contracts, again, this might not be appropriate for everybody, but for some organisations, it may be very much appropriate to update your template contracts. So contracts of employment, but also contracts of service for any contractors or self-employed individuals that you may deal with, okay, to include a clause on this matter. Okay, you may even have something in there already on compliance in general. Again, just thinking about whistleblowing or bribery, and it's something you might just want to update to include this act as well, or these offences. All right, but this is something you could do. For any existing staff, it may be that you decide actually we need to issue a variation to terms letter in respect of this change as well, so that they all know it applies to them. And that's absolutely fine for you to do. Okay, remember that because this is a legal obligation on you to try and prevent facilitation, this is not something that you are going to have to consult with staff on in terms of a change to terms, and you're certainly not going to need to seek their consent in any formal way, all right? As is always the case, though, when you do change terms, even informally, my advice would always be, that you communicate what you are going to change, the reasons why you're going to change the terms, and when those terms are going to be effective from. Okay. Now, it could be effective immediately, and that's absolutely fine. And in fact, it should be really, given that this act is already in enforcement. But it's just good practice to make sure that you've communicated those things. Again, if you should have to take somebody to task over it, and you want to rely on the fact that you advised everybody that this is a term of your contract, that this is something you have to comply with, but you didn't make it clear when this was going to come into effect, what was coming to effect or why, then it's going to be very difficult for you to try and take any disciplinary action or uphold any allegations based on the fact that it was a contractual requirement. Okay. Handbooks. So if you do have any handbooks, why not put some dialogue in it with regards to this matter? And yet again, it might be something that sits alongside any whistleblowing commentary or any other compliance matters that you have in there. Handbooks, I think, are an excellent tool because they are just such an easy channel that employees often know to refer to if they're in doubt about how to go about anything within their organisation, how their employer is going to deal with matters. Okay, so if you only manage to raise awareness and they don't remember what they're supposed to do about it, if they know that they have a handbook to go to, then bingo, you've got a really great tool there, point of reference that's commonly known amongst individuals that they can refer to. And then lastly, internal communications. Okay, so it might sound easy, but I am just talking about an email, out to people, or a letter if you wish. But we often throw so much at employees, about rules and expectations, and it can just get so lost in everything, especially when there's something really important that you want them to digest and take on board. So with regards to this, given the fact that this can impact the organisation as a whole, then I think you'd be well within your rights to think this is something you particularly want to elevate above other communications that you can hone in on. So why not consider sending an email out to all staff or some other form of communication that's appropriate? Make sure it's separate, don't mix it in with other updates that are happening in the company or something distracting like change to employee benefits, or holiday, because they're just going to ignore it. Make sure that communication on it is clear and that it's very specific, okay, what you require, what sort of situation is covered. And again, please keep a paper trail. And I've mentioned that already, but it is true of all these things, really. It would be such a shame if you spent time and effort putting these things into place, but didn't have any evidence that you'd done it, or didn't have any evidence that you'd actually rolled it out, or that you actually operate it on a regular basis. Okay. This, after all, is going to be your evidence, which is going to form your excuse against any liability for facilitation or failing to prevent facilitation. Okay, so I hope you found those tips helpful and quite practical. It's quite a serious issue, but I think there are many things there that we can do from HR perspective to protect the employer. So we're going to move on then now from the Criminal Finances Act, and we're going to have a look at the Finance No. 2 Act. So obviously the first one wasn't quite covering everything that they wanted it to, and we've got finance number 2 to deal with. But principally within this, we are going to look today at this new acronym, PEMP, which stands for Post-Employment Notice Pay. So let's have a look. So if you have heard of it but haven't quite managed to wrap your head around it, that's fine. So what it is, it's a calculation, okay? It doesn't replace PILON, it doesn't replace pay in lieu of notice. I'm afraid it's something new that we have to get on board with, in addition to everything else. So PEMP is a calculation, all right, and it comes about when you have an employee who's leaving you for whatever reason, be it resignation or termination or anything, and that employee receives no notice or less notice than what is due to them when their employment ends. Okay. So it's for employees who receive no notice or less notice than is due to them. Okay. And this figure represents how much basic pay the employee would have received if they had worked their full notice period. Okay. And it then tells you how much tax needs to be paid on that amount. Okay. So this is different to PILON because it's not a clause or a condition that you can utilize in a contract, for example. Okay, this is a legal requirement, it's a legal obligation on us. So in circumstances where PILON may have been payable tax-free, okay, now PEMP is going to override that. So it means that an amount proportionate to the notice that would have been worked is always going to be charged for tax, okay? And that is regardless of whether or not you had a contractual pay in lieu of notice clause or whether you had a non-contractual practice of paying in lieu of notice, okay? Any payment that an employee receives when they leave should have this PEMP calculation applied to it so that tax is being paid on amount equivalent to notice. Okay. Now, a bit of advice that I would like to stress here. Whenever you are in a situation then where an employee is going to receive less notice than they're due, according to their contract, let's say, or statutory notice, then you should inform payroll, okay, straight away. The reason for this is payroll systems are not necessarily all going to be updated to ensure that PEMP is calculated, okay? So if, let's say, you have a pro forma that you might complete when you have a leaver and you send that off to payroll so they know what to process, okay, it might be that you consider updating that pro forma to prompt you to say whether or not they are going to be working less notice than they're actually due, so that they know they need to manually apply this formula, okay, this calculation. So for anyone that is keen on this, I've put the formula here for you. This is the HMRC's guidance, all right? So I have just copied and pasted this because I didn't want to take responsibility for interpretation or misdocumenting it. But essentially, as you can see, we've got basic pay, okay, of an employee in the last period ending before the trigger date, multiplied by the number of calendar days in what's called the post-employment notice period, okay? We'll take that figure, divide it by the number of days in the employee's last pay period. We then take that figure and we deduct off any payment or benefit that's received in connection with that ending of the person's employment, which is chargeable to income tax. Okay, and now there are aspects and elements of that that are subject to exemptions, all right? So I'm afraid it does get very complicated. So if you are responsible for payroll, I would strongly advise that you have a look at these guidance pages. So that's the references that I've put here against the EIM reference, okay, to have a look into it. But otherwise, I just wanted to include this really here for your reference, so you've got something to go back to if you should need it in the future. All right. But by doing that calculation, okay, it's possible to end up with a negative figure. Okay, now if that happens, then it means that the amount of notice pay is nil. Okay, and if the amount given actually exceeds the total amount of the payment that was going to be made to that person, then the post-employment notice pay that's chargeable is capped at the total amount of the relevant termination award. So I'm afraid it does all get quite technical. There's a lot of jargon in there to wrap your heads around. I want to move to the next slide because this is where I'd prefer to focus on the technicalities, again, from a HR perspective rather than a payroll perspective, okay? But people are starting to ask what termination payments, are included or covered, okay? So this was something that was brought about in 2017, but actually the effective date is the 6th of April this year. Okay, so it's going to be applicable to any payments, including any benefits that fall under that section there, which are received as a result of somebody's employment being terminated. Okay, and this is by resignation, by dismissal, by settlement, and so on. It also applies to any payments or awards, again, that are received on or after the 6th of April. It applies to anyone whose employment ended on or after the 6th of April. Okay. It applies to the payments, again, or benefits that are not statutory redundancy payments, okay? So this is not applicable to redundancy payments or any approved contractual payments that are exempt under this section. And lastly then, it applies to payments or benefits that are not chargeable to income tax by virtue of any provision other than that in Chapter 3 of Part 6. So again, I'm afraid it does get really technical, but there's just no other way really to go about it. Payroll professionals will have to be digging the book out on this one until they get familiar with it. But in short, okay, this applies to anyone whose employment ends on or after the 6th of April, anyone who receives payment in relation to a termination of their employment on or after the 6th of April, but it does not apply to redundancy payments. So what kind of impact does this have on a practical day-to-day basis then? So I'm going to have a look here at PILON clauses because from HR perspective at least, we're quite familiar with having a pay in lieu of notice clause in a contract. And maybe even the flip side, we might be used to thinking that we would prefer to reap the benefits of not having a pay in lieu of notice clause in our contracts, okay? But if you've wrapped your head around what I'm saying here about PEMP, okay, effectively that regardless of a PILON clause, any payment is going to be subject to this PEMP calculation in theory, okay, so regardless, any payment there that could cover basic pay that would have been earned if an employee worked their full notice is going to be subject to tax as income. So actually, this means that there isn't any benefit anymore to leaving a PILON clause out of a contract of employment. So this is quite a significant change to the face of HR and clauses that we put in our contracts, okay? So the reason for this is, if there are no benefits to leaving it out, then if you continued leaving it out, you're only faced with the associated disadvantages of leaving it out, okay? Now, if you're wondering what they could be, there are actually many disadvantages of leaving a PILON clause out, but one of the key ones, perhaps, especially now, now that we are forced to consider the fact that we have to be charging tax on an amount equivalent to notice pay, which means we have to be charging an amount equivalent to notice pay, which you should have been doing anyway if you were working by the book and somebody left, especially because we dismissed them. Then you've got to put that all through the books, all right? Now, if you had a PILON clause before, then it's possible you could have got away with not paying tax in some circumstances, okay? But now, because we have to be paying it, if you haven't got a PILON clause and somebody leaves and you pay them their notice in lieu, then having made that payment in lieu of notice, even though you had no contractual right to, actually puts you in breach of contract. So there's one to get your head around. You pay somebody what they are legally obliged to be paid, but because you don't have the clause to do it in their contract, you could be in breach of the employment contract. Okay, and this actually matters particularly in respect of any post-termination contractual obligations that you have with somebody, okay? Take restrictive covenants, for example, okay? Because you might be aware of the fact that if you end up in breach of contract in respect of one element, then it can render other contractual elements void as well, okay? So my advice is very much the case that you should consider putting a PILON clause into all of your template contracts by default, so it's just always there, and then that way you don't ever run the risk of falling foul, you don't ever run the risk of being in breach of contract. And then I just wanted to look at settlements as well, because again, in HR, we can be quite familiar with talking about payment in lieu of notice in the context of a settlement agreement. Now, if you've never had to do a settlement, then, look at you. If you have, then you might be aware of the fact that the first £30,000 of a settlement sum is exempt from tax. Okay, which is great, except it used to be the case then that when we were drafting settlement agreements, we would look to see whether or not there was pay in lieu of notice clause in a contract, okay? And if there was no clause about it, then it meant that actually as part of our offer to an employee, we could either contract out of having to pay notice through the terms of the settlement agreement, or it might be that you propose to the employee, look, I won't pay your notice as pay. What I will do is I will pay you a gross amount equivalent to the notice that you would have had as part of the termination figure. So actually, you're better off because you're still going to get your notice pay, but you're going to get it tax-free. And you might even be topping it up with another compensatory amount on top of that as well. Okay, so you can see that's quite an attractive offer to make to somebody. But of course, this Finance Number 2 Act and PEMP means that we can't do that anymore, okay? Or at least the benefit of it is gone, because as soon as you make that termination payment in respect of a settlement agreement, the PEMP calculation should be being applied, and any amount that covers the basic pay that the employee would have received as earnings for their notice period is going to be subject to tax. Okay, so it means, you know, that benefit is just not going to be there anymore, unfortunately. Now, it doesn't touch the £30,000 figure, okay? So if you paid notice and then you were paying a compensatory amount for loss of office on top of that as well, you know, that compensatory amount would be covered under the £30,000. Okay, the notice section is not, you know, taken off that £30,000 amount. But it prompts us to consider other things as well. You know, it prompts us to consider how this is actually going to affect the value of the offer that we make in any negotiations, because it's just not going to be as attractive anymore, you know, to say that we will make a payment in lieu of notice. It's going to be far better that we adhere to our template contracts, which have now perhaps all got a pay in lieu of notice clause in them. We separate out in the settlement agreement how much somebody's going to get paid in respect of outstanding wages, holiday, notice pay. And then we have a clear compensatory amount that is subject to this £30,000 tax-free. Okay. So that brings us to the end of the webinar. I hope that you found that helpful. It isn't a core HR subject, as I said before, but also we do start to see where actually HR can start to help out in some things like this. And goodness, don't all weird and wonderful things tend to fall at our doorstep. So hopefully you'll feel that you've been given some really helpful practical tips as well that you can implement fairly quickly. But if you did have any follow-up questions, please do pop them over to me. I will try and get back to you as soon as possible. And, you know, I will try and get to them all at some point, at the very least. We've got seminars going on. If you're interested, why not come along? We've got one tomorrow and the next day as well. So if you've enjoyed today or past seminars and webinars, come along and see us. It will be a nice day. We're providing coffee and lunch and things because we're nice like that, and it would be nice to have others along. But otherwise, thank you very much for your time today. Again, hope that was helpful, and do please pop me over any questions and request the slides if you want them. And otherwise, take care and perhaps see you again next time. Thank you.